First here, Coinbase providing customer geolocation data to ICE. According to a new report, crypto exchange Coinbase has provided Immigration and Customs Enforcement, or ICE, agents with a suite of features intended for tracking the company's customers. The report indicates that ICE has been granted access to an intelligence gathering application called Coinbase Tracer, which provides a variety of forensic data tracking capabilities. U.S. Immigration and Customs Enforcement, or ICE, is a law enforcement agency within the Department of Homeland Security, or DHS. ICE's primary mission is to promote homeland security and public safety through the criminal and civil enforcement of federal laws governing border control, customs, trade, and immigration. The Coinbase Tracer is designed to help ICE trace malicious and fraudulent transactions on the blockchains. According to The Intercept, the tool will allow ICE agents to connect addresses to real-world entities. The recently released email from the Freedom of Information Act was shown that ICE was not required to agree to an end-user license agreement with Coinbase. This agreement is typically used to outline what users can and cannot do with the company's software products. This means that ICE is free to use the data tracking tool as it wishes with very few restrictions. When Coinbase was questioned about these developments, spokesperson Natasha LaBranche merely supplied a link to the company's website with verbiage addressing the issue. The relevant information on the Coinbase website states that Coinbase Tracer sources its information from public sources and does not make use of Coinbase user data. So I guess that's probably how they get around that protected information, saying, oh, it's public information. The Coinbase spokesperson did not provide further information regarding limitations on Coinbase Tracer's use by ICE. ICE's access to Coinbase Tracer is a result of a contract signed between the two parties in September 2021. The contract, worth $1.36 million, was vague as to the nature of the services to be provided by Coinbase, but did stipulate that the crypto exchange would be delivering application development software as a service to the agency. The exchange, Coinbase, has been making headlines recently for a variety of reasons. According to Cointelegraph, the company is looking to aggressively expand its operations in Europe in order to increase its market share. However, on Monday, Goldman Sachs released a report that downgraded Coinbase stock to a sell rating following a correction of more than 80%. So, I mean, I don't blame them in this market. They're trying to do things to grow. They're trying to do things to hopefully seem more favorable in the market. What do you guys think on that? Do you think that that's a breach of security? Do you think that that's a good thing, them, working with ICE in terms of that? Let me know your guys' thoughts. Up next here, better days ahead with crypto deleveraging coming to an end, JP Morgan. A JP Morgan analyst has suggested that the cryptocurrency market may be nearing the end of its historic period of deleveraging, which could signal the end of the bear market. In his Wednesday note, JP Morgan strategist Nicholas Panagurtzoglou highlighted the increased willingness of firms to bail out companies and a healthy pace of venture capital funding in May and June as a basis for his optimism. He said key indicators support the assessment, citing the bank's net leverage metric as an example of evidence that deleveraging is already well advanced. The recent collapse of the Terra ecosystem has led to a significant deleveraging among major crypto firms as assets have been sold either willingly or through liquidation. This has caused problems for crypto lenders, BlockFi and Celsius, as well as investment firm Three Arrows Capital. Nicholas noted that the deleveraging of some crypto firms could be quite severe and that the repercussions from this year's market crash could be felt for some time to come. Absolutely. He argues that the process of reducing debt may be coming to an end, with crypto entities providing support to struggling companies. He states that crypto entities with the stronger balance sheets are currently stepping in to help contain the contagion. Amid the challenges faced by several blockchain firms, Sam Bankman-Fried's FTX exchange is reportedly positioning itself to expand its influence across the industry. According to a June 30th report from Cointelegraph, there are rumors that FTX is offering to buy the BlockFi crypto lending platform for $25 million. However, BlockFi CEO Zach Prince has denied the rumors in a June 30th tweet. According to Panagurtzoglou, the healthy pace of venture capital funding in the crypto space is a good sign. Based on estimates from JP Morgan, there was approximately $5 billion in VC funding to crypto firms in May and June. However, Dove Metrics, a fundraising metrics tracker using data from Airtable, estimates that crypto funding is actually higher at $8.6 billion in the same period. This funding rate is $2.2 billion lower than in March and April, but $3.4 billion higher than in May and June 2021. JP Morgan's latest predictions should give crypto investors hope for 2022 after what Glassnode has called the worst bear market in the history of crypto trading. Do you guys agree with that statement? Do you think this is the worst bear market we've ever seen? Since November 2021, when the total crypto market cap topped $3 trillion, it has fallen to $934 billion, according to CoinGecko. I mean, that's a pretty big dip, I have to admit. Where do you guys think it's going? I love to read the comments. Where you guys think the market's going? Do you think it's going to continue to drop a lot further? Do you think this is the end? And with that leading into Bitcoin price, June close barely beats 2017 high as Coinbase Premium flips positive. In June 2022, Bitcoin finished just below $20,000 after a last-minute pump saw bulls escape 40% monthly losses. The data from Cointelegraph Markets Pro and TradingView showed that BTC USD rose sharply just before the monthly close. The closing price on Bitstamp was $19,924. This was just barely above the all-time high from the previous halving cycle in November 2017, when Bitcoin reached $19,770 on Bitstamp. And here's a tweet of that. The success of Bitcoin in the market was uncertain, with many experts predicting it would not survive. Nevertheless, it has persevered and is currently thriving. It experienced its worst monthly losses in September 2011, but has since bounced back and is now stronger than ever. In his Twitter comments after the close, indicator creator and analyst Philip Swift summarized that Bitcoin was steadily carving out a cycle bottom. This weakness came as United States equities saw dismal results of their own. Q2 2022 was the worst since 1970 for the S&P 500, while the Nasdaq saw its weakest H1 since 1998. According to Michael J. Burry, an investor from The Big Short, the S&P 500 and Nasdaq will be down 25 to 26% and 34 to 35% respectively when adjusted for inflation in the first half of 2022. He also predicts that Bitcoin will be down 64 to 65% by then. Previously, Burry had forecast that U.S. monetary policy, which is currently focused on driving up interest rates to fight inflation, would be forced to change course before the end of the year. When asked about the current state of the crypto market, William Clement, lead insights analyst at CLOCKWISE, stated that there are signals of bottoming and accumulation everywhere. He went on to say that major funds and lenders going bust is the worst quarter ever, and that no coiner haters are dunking on us. Clement believes that the whole timeline is saying that this time is different, but that we will still see months of boring and capitulation through time. Among institutional investors, there was fresh evidence that BTC was a buy at $20,000. According to CryptoQuant, the Coinbase Premium returned to positive territory on June 30th after being negative for the past 2 months. This is a significant development as it could signal renewed interest in cryptocurrency. The premium is the difference between the BTC price on major exchange Binance and U.S. exchange Coinbase's institutional arm, Coinbase Pro. When positive, the Coinbase Pro premium suggests heightened demand from investors. As of June 30th, the premium was 0.217. According to Ki-Young Ju, CEO of CryptoQuant, the recent uptick in prices does not necessarily mean that a bull run is underway, but it does show that there are institutional buyers active in this price range. Do you guys agree? Do you think this is a buy time? Are you still selling? What do you guys think? I mean, I always love to read different people's opinion on Bitcoin price, any type of technical analysis, and see where they think the prices are going. Up next here, not giving up. Van Eck, refiles with SEC for spot Bitcoin ETF. There we go. Van Eck, one of the first firms in the world to ever file for a Bitcoin exchange-traded fund or ETF, is continuing its efforts to launch a spot Bitcoin ETF in the United States. The firm has submitted a new application for a Bitcoin ETF that is backed by physical assets to the U.S. Securities and Exchange Commission. On June 24th, Van Eck filed its latest application for a Bitcoin ETF. This comes months after the SEC rejected its previous request for a spot Bitcoin ETF on November 12, 2021. The securities regulator based its decision on the ETF on its alleged inability to meet standards to protect investors and the public interest, as well as to prevent fraudulent and manipulative acts and practices. In its latest filing, Van Eck provided a range of compelling arguments for why the SEC should approve a Bitcoin ETF at this time. ETF company argued that the lack of a U.S.-listed spot Bitcoin exchange-traded product does not prevent U.S. funds from gaining exposure to Bitcoin. They stated that many U.S. ETPs use Canadian BTC ETPs to gain exposure to spot BTC, and approving this proposal would provide U.S. ETFs and mutual funds with a U.S.-listed and regulated product to provide such access. As it was previously reported by Cointelegraph, Canada was one of the first countries in the world to introduce a Bitcoin spot ETF, with the launch of the Purpose Bitcoin ETF in February 2021. Van Eck went on to say that in light of the SEC's decision to allow Bitcoin futures-based ETFs, approving a spot Bitcoin ETF would be a logical next step for the authority. As previously reported, Van Eck's BTC futures ETF began trading on the Chicago Board Options Exchange on November 16, 2021. The CME Bitcoin futures market is a regulated market, and the only consistent outcome would be approving spot Bitcoin ETPs on the basis that the Bitcoin futures market is also a regulated market of significant size as it relates to the Bitcoin spot market. According to Bloomberg ETF analyst Henry Jim, the deadline for Van Eck's latest spot Bitcoin ETF is March 3rd, 2023. Here's a tweet out about that. This date is significant as it marks the 5-year anniversary of the launch of the first Bitcoin exchange-traded product. Van Eck, one of the first U.S. firms to ever file for a Bitcoin futures ETF, originally filed for a physically backed Bitcoin ETF in June 2018. However, the SEC repeatedly postponed its decision over the proposal, eventually rejecting it 3 years later. So, more to come on that, I'm sure. Up next here, multi-sigs mean funds and bridges are one small slip-up from being hacked. The recent exploit on Harmony's Horizon Bridge highlights the potential risks associated with multi-sig admin keys. One small mistake can lead to serious consequences for projects and their users. The expansion of the multi-chain ecosystem could be hindered by the use of multi-sig contracts due to the dangers they pose with bridges keeping crypto funds safe, said 2 crypto project leads. Multi-sig refers to the requirement of multiple individuals to approve a transaction. The multi-chain ecosystem consists of hundreds of blockchains with varying consensus algorithms that often interact with each other through token bridges. Derek Yu, founder of the Moonbeam blockchain, said that he advocates for new, more secure approaches that aim to eliminate human error. Yu said that the multi-chain ecosystem is seeing increased usage due to the desire to move assets to different chains, but that it needs much better security measures. Horizon Bridge, a popular token bridge between chains, was exploited on June 23rd, resulting in the loss of approximately $100 million in crypto assets. The attack was made possible when 2 signee keys for the Horizon Bridge's multi-sig contract were discovered by the attacker. It is clear that the multi-sig approach is far from perfect and that there are more secure designs that could be implemented. However, developers often have to make compromises to get to chains with a lot of activity. CEO of the Mina Foundation, Evan Shapiro, shares Yu's distrust of the multi-sig approach, given the more advanced measures available to the industry now. He feels that the over-reliance on trust is the biggest problem facing the multi-chain ecosystem. Shapiro told on June 30th that the obvious problem is based on third-party custodians serving as trusted intermediaries for bridges. In his view, the ideal scenario would be for blockchains to be verified by each other. However, he acknowledges that this is infeasible and inefficient. An alternative is to utilize zero-knowledge proofs, which compress and verify the massive amount of data stored on blockchains. Shapiro clarified the issue with token bridges by explaining that users must trust either the first or third party when making the bridge. He noted that this concern is not about the code, but about the entity. So there you have that. Unfortunately, there's way too many hacks and exploits going on in the space. Hopefully they can do something to come up with a solution for the future, especially as crypto becomes more and more popular. And last but not least, your worst quarter in 11 years as Bitcoin price and activity plunges. Bitcoin recorded its worst quarterly loss in 11 years, with both prices and activity on the blockchain dropping significantly over the past 3 months. For the second quarter ending June 30th, Bitcoin's price saw a 56.2% loss, according to Coinbase, falling from $45,000 at the beginning of the quarter to $19,884 by midnight ET on June 30th. It has been the steepest price fall since the third quarter of 2011, when BTC fell from $15.40 to $5.03, a loss of over 67%. It's crazy how just 10 years ago, 11 years ago, it was that price. This is worse than the bear markets of 2014 and 2018, when Bitcoin's price slumped by 39.7% and 49.7% respectively in their worst quarters. The past quarter saw 8 weekly red candles in a row for Bitcoin, and the month of June saw a drawdown of over 37%. This is the heaviest monthly losses since September 2011, when the price fell more than 38.5% in the month. Investors' behavior suggests that they are either conserving their resources or have exhausted their financial options during this bear market. According to a June 29th analysis from Arcane Research, activity on the Bitcoin blockchain has declined by over 58.5% in just 9 days. It is not only crypto markets that are experiencing turmoil. Sky-high inflation and rising interest rates have also taken a toll on the traditional stock market, with some calling it the worst quarter ever for stocks. In the first half of 2022, the S&P 500 index experienced its worst start to the year since 1962, with a price return of negative 20.6%. This was shared by Charlie Bilello, CEO of financial advisory firm Compound Capital Advisors, via Twitter. The difficult economic conditions have resulted in a number of crypto companies laying off staff, including Gemini, Crypto.com, and BlockFi. Most recently, the crypto and stock trading platform Bitpanda cut its employee count by approximately 277 full-time and part-time employees. Crypto is inextricably linked to the wider tech sector, and the tech-heavy NASDAQ Composite Index fell by almost 22.5% over the second quarter. According to a tech layoff tracker from technology jobs board TrueUp, over 26,000 tech employees were cut back in June alone. This is across 200 different companies. During the past quarter, a total of 307 layoffs took place across a number of different companies, affecting over 52,000 employees. One of the largest layoffs occurred at Tesla, where 3,500 employees were impacted. Coinbase also experienced a significant amount of layoffs, with 350 employees affected by a hiring freeze and 1,100 employees impacted by a job offer recession. Very unfortunate. My condolences to you if you're affected by this. I hope this doesn't last long. I hope the markets start to turn around soon. But that is all we have for you guys today. Thank you so much for watching. Make sure to like, subscribe, hit that notification bell, leave a comment at what you want to see in a future video, and we'll see you next time.